Welcome to the Business Spotlight series. My name is Dona Kappmeyer, and I'm going to be your host for today. I am very excited to have our special guest, Nimi Natan, on our show. Nimi is with Gulf Coast Small Business Lending, a bank-owned small business lender out of Dallas, Texas. And today we're going to speak with him about his journey to get to where he's at today and the challenges and successes of owning and operating a business. If this is your first time on our channel, please be sure to like and subscribe so you can get our new content. Nimi, welcome to the show. It's great to have you on.
Thanks, Donna. Thanks for having me.
Well, awesome. We're looking forward to the conversation today.
The same.
Awesome. Well, let's just talk a little bit about your business. What is it all about and how did you get started?
We are, as you pointed out, we are a small business lender, meaning that we provide capital for what's described as small businesses. That can be a small restaurant in a strip mall. That can be a company with a couple of hundred employees. So somewhere in the neighborhood of, let's say, $500,000 to $20 million in revenue.
Okay.
And we provide a variety of products to them, all capital, all debt. It can range from SBA loans like the 504, the 7A, the USDA loans, the BNI, which are for more rural areas, and conventional loans, lines of credit. So different kinds of loans to support small businesses around the country. And we're based here in Dallas. I started the company 12, 13 years ago, and then we sold it to a bank about 8 years ago, something like that. And we've been part of a larger organization since then.
So that's a little bit of a unique structure. So what kind of advantages do you have as kind of you're inside of the bank, if you will? What does that look like and what kind of advantages are around that?
It's a good question. I've never been a banker, and I still don't consider myself a banker. And when we were put up for sale and the bank picked us up, I was wondering what it would be like. There's always the fear that you're going to be absorbed by the bank with all the negative connotations that come with it. But that's not what happened in our case. The bank has kept us independent from them. So we run as a specialty finance company. The major advantage we have is access to liquidity ourselves. We are in the money business. If we don't have money, we're out of business. So being part of a bank, well-capitalized bank, makes a huge difference. Before we became a bank, when we were a non-bank lender, I probably spent half my time raising capital. And now it's just not part of my job. I can focus on my customers, on the borrowers, and getting good deals done. So for us, it's been a great, very advantageous, and we've grown tremendously since they acquired us. It comes with, it's not bad, but it comes with attributes that non-banks don't have to deal with: regulation, compliance. We have, I don't know how many regulators over us, but it's not bad. It's makes us better, makes our processes better, makes us provide better loans. So not whining at all about what comes with being part of a bank.
So is it just one bank that you're tied to?
Yes, we're owned by Gulf Coast Bank and Trust, which is a large privately held bank in Louisiana and Florida.
So very good. So you got some advantages there. So you don't have to worry about getting the capital, raising the capital, and you can focus just on the lending side. So let's talk a little bit about your ideal clients and what that looks like. If people are looking for loans, how do they get a hold of you? What does that look like?
Yeah. So as a small business lender, we focus on owner operators. So if you're wearing an investor cap, we're probably not the right lender for you. We're looking for men and women who run businesses, and they can use it for different things. They can buy a business. So someone decide to leave corporate life, has a small amount of cash ready to deploy. They need the support of a lender. That's what we do all day long. But it has to be an owner operator. We nothing against private equity, venture capital, and investors. It's just not what we do. We really align ourselves with the owners and operators of small companies. And then it can be used for basically anything. So our capital is used to acquire businesses, acquire real estate, acquire equipment, buy out a partner, restructure a balance sheet, invest in marketing. So you go down the list of what a small business owner needs to operate a business. From a financial perspective, we probably have a product for that. So that's really what we focus on. As far as how we get our business and how to get a hold of us, the loan, let me think for a second. I would say half of our referrals come from loan brokers and a great group of people around the country, often affiliated with company brokers. So if you're going to buy a company, the broker can probably introduce you to a lender like us. We're not the only lender by any stretch. So that's probably half of our business comes through the brokers. Another 25% comes from referrals from banks, other lenders. If they know that we are able to get a loan done that they cannot, maybe it's too big, maybe it doesn't have collateral or enough collateral, maybe the bank is too small to support that particular client, then they send us the business. And the rest of it is all kind, people find us on if you Google, or however you search these days, if you Google franchise finance, there's a good chance you're going to run into us, for example. We do a lot of franchise lending or RV park financing. So those are people who just find us on the web, word of mouth, things like that, and we deal directly with the borrower at that point, not through an intermediary.
Awesome. That's fantastic. So owner operators, because they've got a vested interest, right, in being successful, and they're not kind of that outside. If we look at private equity and other kind of funding, I really like that.
Yeah.
Are there any kind of recommendations for those who might be listening to this podcast about here are kind of the minimum requirements you need to consider? Maybe if you're starting a business or you're considering a loan, keep these things in mind, or here's some minimum requirements that we recommend when trying to pursue some sort of loan.
Yeah, it's a long list, and it's very specific to the type of loan. My advice is to talk to a banker. I think every situation, you know, again, not criticizing the online lenders and AI, but every loan is different. Every situation is different. Every borrower situation is different. So we do this for a living. We look at 1,000 loans a year. We'll do, I don't know, 250 loans this year, and every loan is different. Every loan requires us to sit back and try to figure out the best way to put it together, or as we call it, structure. So my suggestion is find a trusted advisor. It can be your accountant, it can be a wealth planner, it can be your banker, and say, here's what I'm trying to accomplish. I own a small company. There's an opportunity to acquire a competitor. How do I go about it? So first, I would start with the operational aspects of it. Why do you want to do it? And then peel the onion back and say, okay, what are the financial requirements to do that? So you immediately think, okay, I need $500,000 to acquire it. And then you think about, okay, and I also need working capital so it cash flow, because I need liquidity. So I need a small revolver to go with it. And again, a good banker can help you with that. We can help you with that as well. Trying to get the perfect set of products. We refer to them as products because every loan is a little different. The perfect set of products, really a solution for your financial need, which are fed by your operational need. So that's my advice. There's no. I wish there was a. I wish there was a smart enough online resource where you would type your situation, it will spit out a structure and a lender.
Mhm.
It's not smart enough to do that yet. So I would talk to a live person about that.
Awesome. Very good. Because every situation is different.
It really
Indeed.
is. It really is.
Awesome. So let's talk about your company and your team. What does that look like? And, why would people want to work with you?
Yeah. Uh, that's quite the premise. I'm not sure they want to work with us. What I mean is there are 3,000 lenders like us, and we're not the right lender for every situation. Every lender that tells you we can get it all done, it's just not the case. At least we haven't found somebody like that. Our team, there are about 65 or 70 of us right now. We're a
Wow.
national lender, so geography, as far as we're concerned, geography is not a limitation. We've probably made a loan in every state. I would say we made a loan in every state in the nation, offices around the country. What I would say is, so we're part of a bank, but we're not a bank. I think it's important for whomever is listening to this to understand that in general, banks are interested in deposits. Specialty finance company who focus on lending specialize are interested in lending, and those two are completely separate objectives. So sometimes the bank is, even though they offer similar loans, they may not be the right partner because they want your deposits before they want to give you any money. And you may not have deposits, or you may be interested in continuing to work with your existing bank. So what distinguishes us and lenders like us is very focused on putting out money and lending, not investing, lending to small businesses. That's all we do. So if your situation needs explaining a little bit, you really need an expert, you really need a specialist. So a firm like us is very much that. So I would say that's in general, I suggest for small businesses, small business owners, to find a specialist as opposed to a bank that tells them that they can do everything. So that would be number one, and we try to live that. When it comes to us, all we do is make loans. Our entire organization, excuse me, our entire organization is structured, all our processes are structured to originate, underwrite, package, fund loans. That's all we do. So hopefully when you meet us, you'll get the level of comfort that we really want to close that loan, and we really want to close it as quickly as possible. And the paperwork can be, not just us, the paperwork can be daunting, the process can be mysterious. There are a lot of technical aspects to it, but you have to find a lender that is very focused on closing the loan. And I hope that's what we specialize in, what we're known for. There are certain things that make us completely different from lenders like us. One, we do not rely on collateral, we rely on cash flow. When we look at a lending opportunity, the first question that comes out of the underwriter's mouth, and later my mouth, is not how much real estate do they own, how rich are they, what kind of collateral are they putting into the pot. It's always, is the business generating or expected to generate enough cash flow to support the loan. Traditional banks rely on collateral. If you don't have collateral, your ability to borrow is limited. Not the case with us. The second thing I'd like us that we distinguish ourselves, even though we're generalists and we do all type of loans, we do have specialty in restaurants and franchises. and it goes back to our heritage before we even started this company, and before we were acquired by the bank. We specialize in restaurants and franchises in general, gyms, hotels, things like that. So we have a soft spot and desire to work with franchise operators.
Love that. So you talked about how your lending is based on cash flow opportunity in the business. Is that less common, um, and makes you unique? That's very
It is.
interesting.
It
I
is.
love that.
I would say a lot of the reasons why I mentioned that banks constitute a big percentage of our referral network. And the reason is because they rely heavily on collateral. A doctor and a successful doctor, good credit score, good practice. You want to move to a larger building, so you're going to acquire a building. Any bank will do that loan because the combination of the acquisition of real estate and then good credit and income. That's a walk in the park. We do those loans. We don't distinguish ourselves by doing them. Anybody will do that loan.
Okay.
Let's take another example. A young dentist, 5 years out of dental school. She has $500,000 of student debt, and she wants to buy into an existing dental practice. That's our type of loan. So there's no collateral, right? And if you look at her
Right.
balance sheet, she owes a lot more than she has. That's our type of loans. We love those loans. So a bank may look at it and say, come back to us in 10 years when you accumulate equity and blah, blah, blah. But she has the opportunity to do it now. She needs $500,000 to buy into a successful practice without real estate. We would love to help with something like that. So that's the distinction between two similar situations, one with collateral, one without collateral. We gravitate toward the one without collateral, and putting the faith in this case, in the young dentist.
Fantastic. I love that. So you talked about franchises, restaurants. Are there businesses that y'all typically stay away from that you don't want to be involved with?
Yeah. And it's only because, so if there are listeners here who are in that business, this is not at all about your business. This is our experience with lending to those sectors and not doing well in them. So maybe we don't understand them, maybe we don't structure it correctly, but we just haven't had success with them. One that's perennially on our list are what I would call marketplace retailers. Very successful businesses. They go from zero. So those are retailers on Amazon, for example.
Okay.
And I'm an avid Prime customer, so this is also not a dig at Amazon at all. And that ecosystem exists because of small businesses. That's who populates the marketplaces, Amazon. So we have not been successful lending to that. The growth rate is so rapid and unpredictable. And Amazon, good or bad, has the ability to control the spigot. So their algorithm can change overnight. Their algorithm changes overnight. So it's impossible to predict what orders will be, what sales will be, what profitability will be, and then they can just shut you off.
Mm,
So it's a thrilling business, and I know many entrepreneurs who have done really well on the marketplaces. It just doesn't lend itself to the term loans that, when we issue a loan, predictability of cash flow is very important, and it cannot be done with marketplace retailers. So I would say that's perennial. We don't do those. Transportation is tough. So we're not. I think you. I don't think You have to be expert to lend to the transportation, logistics, truck operators, things like that. We just don't have that expertise, so we stay out of it. Um, I think that's about it. We love restaurants where a lot of lenders stay away from. We we do technology, although we need to understand it. If it's really, really complicated and we scratch our head, we can do it justice. We don't do that. Um, but basically everything else other than that.
Awesome. So you talked about you got a team of about 65 plus.
Mhm.
Where do you see this business in the next 3 to 5 years? What does it look like?
Uh, the economy goes up and down, and my friend Mike, who hopefully will be watching this, he says people always need money. So the demand for capital in good times and in bad times is insatiable. And the banks, the financial system is, we can't keep up with the demand. We never could. So in 3 to 5 years, we'll be doing what we're doing now, probably on a larger scale. Growth is not a critical component of my business plan. We are growing and growing rapidly, but we are our goals are a little different. We focus on diversity of portfolio, health of the portfolio, as opposed to just plain growth. So we'll be bigger. We'll have additional products. We might have a corollary. We might have another expertise. So corollary to the franchise finance business that we established a couple of years ago, we might have another one. We might find a business that we feel we really know and that we can really make a difference. And there's a need among the community that we might launch another business specialty, another industry specialty.
All right. Well, what excites you the most about what the future looks like for you?
I would say the business conditions, the economy, ups and downs, and obviously dark clouds for a host of reasons, is doing well. The small businesses are thriving. The movement of the relocation of people in the U.S. from the Midwest and West to the South and Southeast is bringing on a whole new generation of entrepreneur business operators, uh, immigrants. A huge portion of our customer base are immigrants. I'm an immigrant myself. Those are all very healthy conditions. Really, the grassroots of the U.S. economy are those small businesses, and it's looking really good for that. And being a financial a lender, a specialty lender that specializes in that, makes me excited. We'll have more opportunity to deploy capital, help small businesses, watch businesses that we incubated. We don't get any credit. We're just the bank, but we feel when we see when our customers, when our clients succeed and grow and move on to a bigger and better, it feels really good. And I think the next few years are going to be exactly that.
I love that. It's like, like being the parents. You get to watch them grow up.
We don't get any. I promise you, we get no credit. Only when things go wrong, we get blamed. But that's but that's okay. It's not. It's okay.
So I love to ask this question. You've been in business for a long time and you're successful. Who have been some major influences in your career, or who have you turned to, or what have you turned to help you get to where you're at today?
I think the original inspiration, and why I'm in small business and why on Wall Street and not on Wall Street, for example, is thinking back to. So my dad was a small business owner, restaurateur. He bought a restaurant when I was a kid, and using an SBA loan, so, which is where I ended up. So I would say seeing things. So even though I went through a more traditional finance career path and, New York and private equity and all that, big deals, I think thinking back of how my dad operated a business and financed a business, really, I go back to those days that how the importance of what I do for a living, finance and lending to small businesses. So one, how important small businesses are. Two, how hardworking entrepreneurs are. And then the fact that there is a way to support that community. So I wanted to go into the restaurant business, but my dad said, no, go to college, get a degree. You don't want to work this hard. So, but there is still a way for me to participate in the small business world by supporting it, if not being an entrepreneur myself. So I would say for inspiration, I would say that's thinking back to those days. Ongoing, there aren't a lot of good examples out there. As far as what we do for a living, we really have to. This is not just me. This is my entire team. We really have to rely on instinct and general experience. Small business lending is uncharted territory. It doesn't have the precision that investment banking or Wall Street or anything like that. Really have to think on your feet. Really have to react to the specific need of the specific business and the specific entrepreneur, because so much of it has to do with them, as opposed to a generic business you can study. So I would say that I do spend a lot of time thinking about the economy. It affects us greatly, um, from interest rates to prices to supply chain issues to you name it. It's very much drives our business. So I probably do spend too much time reading the news and trying to understand what's going on in the greater economy.
Very good, very good. If there was one piece of advice you could give to our business owner listening audience, what piece of advice would you give them?
I I I can I can only talk about from a financial perspective. Okay, so it's really specific. So we look at presentations all the time, people who are seeking capital, and I would say before you go speak to a lender, not an investor, but a lender, internalize the difference between what lenders look for and what investors look for. Don't use the same deck. So we sometimes see a deck that is really meant for investors, private equity, and things like that, and it scares us greatly. It's like, oh no, we can't do this. So just, I guess I guess the generic advice is know your audience and
Yeah.
understand that lenders are different from investors, and what we need is a little different. So I would understand that. And this is not a plug, but if you go on our website, I think I wrote a blog about it. It's like how investors and lenders differ, and how to prepare before seeing a lender like me.
Love that. Yeah. Know
I
your
know it's really
audience.
specific, but
No, that's great.
it came to mind.
Oh my goodness, you can't make that up. One of the things we talk about not only at your audience, but also their behavioral profiles and decision making. People are wired differently, and to really
Yep.
know as much as you can about the audience. And so
Yes.
knowing the difference between the two types is very critical. So very, very good information. So how do people get a hold of you? What's the best way for folks to get a hold of you?
Probably LinkedIn, like you and I met,
Uh-huh.
and my contact information is there, and I am fairly diligent about connecting with people who reach out. Just don't try to sell me any AI models or anything like that.
Okay.
But LinkedIn is probably the best, and my name is unique enough that you're not going to find 20 of me. If not, our website has a contact me. I think my phone number even be on LinkedIn, and feel free to. We try to be really approachable. We try to give you quick answers. So, and then what I will do is I may be able to answer your question and even talk about a particular structuring and think about it, or more likely I will put you in touch with a loan officer who can run much faster than I can.
Awesome. Well, Nimi, thank you so much for sharing your story.
Thank
This
you.
has been extremely informational. This is the Business Spotlight series with Donna Kappmeyer and Nimi Natan with Gulf Coast Small Business Lending. Please be sure to like and subscribe so you can continue to see our great content. Nimi, thank you so much for being on our show.
Thank you so much.
Bye
Bye
for
bye,
now.
everyone.
Bye bye.